myself Vaibhav. In today's session of Visual JForex, we will be continuing our work using the indicator named triple exponential moving average, which can be shortened to TRIX. So let us now head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. In last session, I had carried out this instrument subscription, and after that, the position amount was defined at 0. We have also taken into consideration these three TRIX blocks with varying lookback periods 1, 5 and 10 respectively, simply to draw the comparison and see how the price action is evolving, and to define the conditions on the volatility. We are also considering these 5 historical candles of the candle period hourly. And to retrieve the individual variables from this cluster, we will be taking the help of loop viewer. And for last hourly price action, we will have to take this get historical candle with the shift value of 1. And to then pinpoint the exact entry point, this 10-second candles will be used. And here, this calculation was done to define 20 pips. So that's so far the developments. Now we have to continue. And this is the JForex chart. The time frame is hourly. Euro USD is the instrument of choice, and I have also plotted the TRIX indicator with the default candle period of 30. So we have this plotting, and as you can observe from here, the TRIX has now started to rise, and this is the kind of time when we want to get involved for a buy trade. So as I had explained to you in the last session, we consider the last hour's TRIX output value. We compare it to the output value of the TRIX 5 hours back, and it should be higher, and the output 5 hours back should have been lower than the output of the TRIX 10 hours back. So we will be having this smooth arc, and whenever we see the reversal of sort happening in the charts, we will be going for a buy trade. And we also need enough of volatility. For that, we have that calculation which has been used to define the 20 pips. So in last 5 hours, the difference between the highest and the lowest value should be more than 20 pips. That is going to be the minimum requirement. The last hourly candle will need to be closing higher, and whatever is the difference between the last hour's closing price and the last 5 hours closing low, we will take half of it. And this time around, what we will do, we will simply go for the price to correct, and whenever that happens, if it is going to happen in an hour, within the hour, and whenever price dips and again starts to rise above that level, we will go for a market open. So this time around, we will be trying out this novel setup, and I will be explaining to you how you can define and design it. So now let us get started for the day, and we will have to start with the calculation. Here we will have to define the difference between the last hour's candle close and the 5 hours candle low. So for that, I am going to take this calculation expression, and last hourly candle is candle 19, so I need to take candle 19's close, which can be found in auto created variables. Here it is. Okay, and I will have to retrieve the HLV's candle low. Here it is, and it becomes A1 minus A2. Candle 19 candle close minus HLV candle low, and whatever is the difference, we will be then after the finding this difference, we will have to multiply it by 0.5. So right now I have to name it, and it will be named as DCH. Okay, and I will take one more calculation expression block, and we will multiply this difference with a new variable, which will have the value of 0.5, where it is, and it is going to be A1 into A2. Okay, and I will take this result of the calculation and name it the price. Okay, and what we will do, we will deduct this calculated value, which is the half of the difference between the last hourly candle close and the 5 hours candle low, and we will deduct it from the last hour candle close to arrive at the entry point for our order. So one more calculation is going to be needed. Again, we take candle 19 candle close, and deduct this value. So we have A1 minus A2, and this will be our entry point for the buy trade. Okay, so far so good. So we have carried out this calculation. Now let us start defining the requirements which need to be in place for the execution to take place. And I will first take 3 blocks, if else, and we have this output TRIX, which needs to be higher. So we have to take first input greater than second input, and this one first input less than second input. So we have this combination of last hour's TRIX output value being higher than the output value 5 hours back, and the TRIX value 5 hours back being lower than the output of TRIX 10 hours back. So this is the minimum requirement, first requirement. And after that, our focus shifts to the price action, and for that we have to consider these calculations we have carried out, but one more calculation is going to be needed to find out the difference between the 5 hours high and low, and that difference will need to be greater than this TP, which has the value of 20 pips. So one more calculation expression needs to be brought in, and is going to be joined to this, and I have to take HLV is high and low, so it becomes A1 minus A2 Alright, and this difference needs to be greater than the 20 pips. Okay. After that, we will be checking whether the last hourly candle close is higher than the opening price or not. We need the last hourly candle to have closed with gains. We have to take candle 19's candle closing and opening values into consideration. Candle 19 is the hourly candle with the look back period of 1. Close and open. First input greater than second input. Okay. And then comes the point of entry, and for that we will have to wait for the price to drop below the level which we have defined here. Candle 19 candle close minus the difference, and whenever that correction happens, and after that correction the price starts to rise again, we will be going for the execution. So we have to compare this level BEP with the closing values of the last two 10-second candles. This is going to be our common second input. Candle 20, which has a look back period of 1, it should close higher, whereas candle 21 should have closed lower as it has a look back period of 2. So we take candle 20 candle close, first input greater than second input, candle 20 candle close greater than second input. Okay, and candle 21 candle close should have closed lower, and we add trade command block, open at market, first input less than second input. Okay, so this is the setup so far. For simplicity, I will first arrange these zip blocks after joining it to multiple action, and then we will define the input values for the trade command block. We'll leave some space as we will need to add further blocks while defining the sell side of the equation, the conditions for the execution of the sell trade, which we will do in the next session. Coming to the variables which need to be defined, we will keep the default instrument as it is. Trade amount will be changed to 0.1 million. Slippage is going to be 2 pips. Stop loss is going to be 15 pips, and take profit 30 pips. So we are getting the risk reward ratio of 1:2. I hope that's good enough. Okay, so this is how we are going to define our setup. And with this, the buy side of this algorithm is almost complete. To check whether the iteration flow is going till the very end or not, we can color code this and check out the block. Yes, it is. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write to me in the feedback section. And also do check out the Dukascopy Analytics page for further coverage on the market development. You can also join us on the Facebook. Our page is there. And whenever you want to start trading, you can use the JForex platform also. And in if any assistance is required regarding the account opening, you can write me in the feedback and I would be more than happy to help. Thank you all for joining in. See you next time. Till then, goodbye.